The day the world watched America blink and Canada roared. April 2nd, 2025 will forever be stamped in the ledger of global economic history as the day North America's energy axis tilted, the day Canada broke from the shadows of its southern neighbor, and the day America stared into a mirror and saw not dominance but decline. What unfolded wasn't just a geopolitical power play, it was an industrial resurrection, a tectonic shift that left oil rigs rumbling, diplomats scrambling, and the world wondering, is this Canada's energy renaissance? After years of political wrangling, courtroom brawls, environmental opposition, and a price tag that ballooned into the stratosphere, the Trans Mountain Expansion, TMX, finally came online. And not with a whisper, but with a roar that echoed across the Pacific.
Behind schedule and tens of billions of dollars over budget, but oil is now flowing through the Trans Mountain Pipeline expansion, which the federal government bought in 2018.
The $34 billion juggernaut comes to life. Once written off as a bureaucratic pipe dream, TMX now stretches like a steel artery from Alberta's tar-soaked hinterlands to the gleaming waters of Burnaby, British Columbia. With a capacity tripled to 890,000 barrels per day, TMX isn't just a pipeline, it's a national artery pulsing with the blood of economic revival. For decades, Canada sold 98% of its crude to one buyer, the United States. But that era, cheap, one-way, and captive, is drawing to a dramatic close. The new TMX slashes through that dependence like a scalpel through scar tissue. For the first time, Canadian crude is no longer landlocked or politically hostage. It has an ocean, a dock, and a destination: Asia. Then came the curveball, Trump's tariff threat. Just as the oil began flowing, the former and potentially future U.S. President, Donald Trump, announced a stunning return to the economic battlefield. From the podium of a packed rally in Tulsa, Oklahoma, he dropped the bombshell, a 10% tariff on Canadian oil and gas. A move aimed, he claimed, at protecting American energy workers from predatory Canadian pricing. The market gasped. Ottawa trembled. But Beijing smiled. Enter Rang Sheng Prochemical, the Chinese gambit. Smelling opportunity, Rang Sheng Prochemical, a major Chinese refining conglomerate with an 800,000 barrel per day appetite, made its boldest move yet, planting its flag in Calgary, the beating heart of Canada's energy industry. Within weeks, the company inked a landmark deal with Suncor Energy, one of Canada's oil titans. The agreement? Starting June 2025, 200,000 barrels per month would sail westward from Burnaby to Zhejiang, feeding China's expanding fleet of mega refineries. And that was just the beginning. Behind closed doors and beyond media flashbulbs, Rang Sheng began negotiating with the heavyweights, Cenovus, Canadian Natural Resources, even Shell and BP, leveraging free on-board FOB contracts. These gave the Chinese buyer power over routing. If Japan's prices spike, the tankers veer right. If India offers a better premium, they drift left. That control, say analysts at S&P Global, could net $2 to $3 per barrel in arbitrage profits. A masterstroke. A veteran at the helm, Wang Jia's oil offensive. Steering Rang Sheng's Canadian offensive is Wang Jia, a 20-year oil veteran who once built PetroChina's trading empire in the West. Fluent in both Mandarin and market psychology, Wang is now orchestrating a new oil opera, this time starring Canada. Industry whispers suggest Rang Sheng aims to control 10% of TMX's flow by 2026. And it's not hard to see why. With demand in Asia exploding and global volatility shaking Middle Eastern stability, Canada's boring oil suddenly became a golden asset. The legal gauntlet, from protest lines to profit lines. The Trans Mountain expansion wasn't handed to history, it was wrestled from it. When the Canadian government bought the pipeline from Kinder Morgan for $4.5 billion in 2018, few believed it would survive. Environmentalists declared war. First Nations, including the Tsleil-Waututh Nation, sued for lack of consultation. Courtroom after courtroom weighed in until a 2022 Supreme Court ruling finally unlocked the project. By the time TMX opened in May 2024, the price had ballooned to $34 billion. But for Canada, it wasn't just about profit, it was about freedom. For the first time, oil from landlocked Alberta could bypass the US entirely and tap into Asia's $15 trillion energy market. South Korea's GS Caltex received the first TMX shipment in August 2024, setting the stage for more to follow. Ottawa estimates $20 billion annually in economic benefits, but critics remain wary. One major spill in the Salish Sea could devastate British Columbia's pristine coast. To calm the storm, the government created a $1.5 billion spill response fund, calling it the most advanced in the world. Trump's tariffs. Catalyst or catastrophe? Trump's tariff wasn't just an economic missile, it was a geopolitical accelerant. In 2023, Canada exported 200 billion Canadian dollars in energy products to the US. A 10% tariff, warned the Canadian Association of Petroleum Producers, could wipe $10 billion from producer profits and spike US pump prices by 80 cents per gallon, according to Goldman Sachs. Trudeau's government didn't wait to be cornered. In June 2024, Ottawa launched a $6.5 billion global markets accelerator, with $5 billion earmarked to help oil and gas companies break into Asia and $1 billion to shield farmers affected by trade spats. And industry moved even faster. The Rang Sheng Suncor deal was finalized weeks later. Natural gas and LNG, Canada's second act. While oil dominates headlines, gas is Canada's silent juggernaut. The $40 billion LNG Canada project, located in Kitimat, British Columbia, is set to ship 14 million tons annually by late 2025. With Shell, ProChina, and Petronas as major stakeholders, it's a bet on Asia's hunger for cleaner fuels. Gas demand in China and Japan is growing by 8% annually, says the International Energy Agency. Canada wants in, but that's just the Pacific. Ottawa is now eyeing the Arctic and Atlantic, with exploratory routes targeting Germany and Eastern Europe, still scrambling post-Russia's gas cutoff. Conservative leader Pierre Poilievre is pushing to revive the shelved Energy East pipeline, hoping to connect Alberta with Europe-bound tankers. Hydropower, the quiet billion-dollar player. Canada isn't just pipelines and gas terminals. Its hydropower exports to the U.S. reached 42 terawatt-hours in 2024, lighting up 4 million American homes and earning $2 billion in revenue. With provinces like Quebec and Ontario leading the charge, Canada is diversifying not just its buyers, but its energy sources. The future toward energy sovereignty. Alberta Premier Danielle Smith said it best during her September 2024 address. "We are no longer America's gas tank. We are a global energy nation." She's projecting $500 billion in export revenues by 2035, driven by oil, gas, and hydro alike. Canada, once tethered to the U.S. like a lifeboat to a sinking ship, is now charting its own maritime path. China's calculated bet and the U.S. reckoning. Despite recent spats over Huawei, canola, and foreign interference, China and Canada are keeping oil outside the ring. There are no sanctions on crude, too vital, too valuable, and with Rang Sheng, LNG terminals, and tankers docking monthly, the dragon's appetite is only growing. In 2024 alone, China imported 184,000 barrels daily from Canada, up 22% from the year before. With TMX and LNG Canada now in play, that number could triple. Meanwhile, the U.S. is left scrambling. Replacing Canada's heavy crude with Saudi or Venezuelan blends could cost American refiners $5 to $10 more per barrel. Consumers will pay the price, a final pivot or a fleeting phase. Canada's new energy model is audacious. It's risky, but it's working. The Trans Mountain expansion is pumping at full speed. LNG Canada is weeks from launch. Rang Sheng is just the first Chinese titan to land in Calgary. Behind them, India, Japan, and South Korea are watching and bidding. The era of Canada as America's quiet energy satellite is over. Now, the nation that once sold all its oil to one customer is opening shop for the world. So, what's your take? Is Canada's Asian pivot a masterstroke of energy independence or a gamble with geopolitical blowback? Are Trump's tariffs a shot in the foot or a spark for new American energy policies? And will China's quiet moves in Calgary mark the dawn of a new global energy order? If you haven't yet subscribed, please do and hit the like button and notification bell to stay posted on every new video we put up. Stay happy and informed in our next video. Bye.